Hi there, everybody. Good morning, good afternoon, good evening, wherever you are. Welcome to today's webinar. Please note, before we start, this webinar is being recorded. My name is Andy Tobin, and I'm Evernym's European Managing Director, currently based in Scotland. This is the latest in a series of webinars on the topic of digital credentials and self-sovereign identity. You can watch our past webinars and see some of the upcoming ones on evernym.com/webinars. Last week we had a really good demo and discussion with a company called Digitree based in Australia about how self-sovereign identity can enhance student mobility in higher education. And next week we're covering the really interesting area of what we call safe credentials, so don't miss that one. When people think about digital identity, they tend to think about humans, people, how we use our credentials to prove things about ourselves and the things we do all the time. You know, it's not hard to translate the world of physical credentials like driving licenses, student ID cards, and so on to the digital realm. So whether it's a person using a credit card to make a purchase, or a doctor proving their qualifications to a hospital, or a student entering university, or a traveler boarding a plane, not that there's much of that at the moment, it's easy for us to relate identity and people. But just as, or possibly even more important, is identity for organizations. Be it public or private sector, organizations have to prove who or what they are, just like people do. And also, people need to prove they work for an organization. They've got authorized signatory rights, for example, and so on. And it's just that we tend not to see this happening in the same way as, you know, using personal identity in our own daily lives. So trust powers commerce. Without trust, commerce collapses. And today, more than ever, it's necessary to establish and maintain what we call trust at a distance. And today, putting this in place, establishing trust between organizations involves huge amounts of friction and huge amounts of inefficiency. And this inefficiency is ultimately very expensive, and it hits the bottom line where it hurts. I'll give you a really simple example that's very close to home. Recently, Evernym needed to open a bank account for our office in Belgrade in Serbia. To make this happen, we had to resort to couriering wet signature documents across the Atlantic multiple times. And these documents had to be physically signed by people at government offices in Utah, which itself took weeks. And ultimately, after months of effort, it proved impossible to set up a Serbian bank account without people physically flying from the UK and the USA to be personally present in the bank to sign the papers, which at the moment, unfortunately, is impossible due to travel restrictions. So that's months of wasted effort just to get a bank account opened. And if you multiply that around the world for all transaction types, from trade finance to international procurement, you see just what enormous opportunities exist for those organizations that can establish high levels of trust purely digitally in seconds and not in weeks or even months. So today, we're joined by three distinguished guests to talk about this very thing. We at Evernym, we've been working with GLEIF, the Global Legal Entity Identifier Foundation, for about 4 years now. Very early in the evolution of self-sovereign identity, GLEIF realized the potential for digital identity for organizations. And as you'll see, they're uniquely positioned to know all about this topic. So joining me today are Karla and McKenna, who is head of standards for GLEIF, where she's responsible for facilitating the development and adoption of standards across the global legal entity identity ecosystem. We're also joined by Christoph Schneider, who is head of IT development and operations at GLEIF, and is also the co-leader of the ISO Technical Committee number 68, which is the FinTech Advisory Workstream on digital identity. And lastly, we're joined by Evernym's own Chief Trust Officer, Drummond. Drummond is an editor of the W3C Decentralized Identifier spec, which is the DID spec for those who are into this space. He's also the interim director of the new Trust Over IP Foundation, which is a really interesting development. There was a webinar on previously, and you'll find much more about that on the Evernym website and also the Trust Over IP website itself. He's been working with GLEIF and others on the topic of organizational identity for years now. So just before we kick off, please note again, we are recording this webinar. Whilst the webinar is progressing, typically on these things, we have loads and loads of questions. So that's great. If you've got questions, please use the Zoom Q&A facility. You'll find that on your screen. Drop it into there. What we'll do is we gather those up and we have a Q&A session at the end. Some of them we might be able to answer live in line as we're talking, but we have a Q&A session coming up. So next is a presentation from the GLEIF team, which I think you'll find really interesting. Then we'll move into Q&A and we'll cover as many of your questions as we can. Let's begin. Firstly, let's hand it over to Karla to set the scene. Could you tell us a bit more, Karla, about legal entity identifiers, how they work, and the part that GLEIF plays in this whole world, please? Over to you, Karla.
Thank you, Andy. Welcome to everyone who joined us for the webinar today. We're really happy to have you here. GLEIF sees the LEI as a key component in building trust for identification and verification of legal entities in business and commerce, because the LEI will allow authentication of a legal entity as it claims who it is and for those who act on its behalf. So I'm going to take you through what is an LEI, LEI in the digital world, how does it practically work, and we're going to end up with some examples in use cases. So what is an LEI? The LEI had its beginnings in the aftermath of the global financial crisis. The initiative itself was driven by the Financial Stability Board, the FSB, on behalf of the finance ministers and governors of the central banks that are represented in the Group of 20. And there was an initial call in the aftermath of the global financial crisis by global regulators to establish a standard international identifier and related reference data in order for this reference data and this code to be accessed and used in regulatory frameworks and in supervision. Because regulators from the financial crisis acknowledged worldwide that they were unable to identify parties to transactions across markets, products, and regions in order for them to carry out regulatory reporting and supervision. The LEI itself is an ISO standard, a code, as I said, stood up by key reference data. And the reference data is both focusing on facts about the entity itself and about relationships that it has. And the global LEI system is operated by the Global LEI Foundation, GLEIF. And the database itself, the repository of the LEIs and their reference data, is available free of charge to anyone who wants to access and use the data. So, if we could go to the next one. So the LEI in the digital world. As Andy said, we've been working fairly recently, if I could call it that, in this space. GLEIF is relatively new to the self-sovereign identity world, as is the LEI to the SSI world. But we soon realized that there are complementary benefits for both GLEIF and for the SSI community of bringing these two worlds together in the area of trusted identity. And we base this feeling on the fact that we think that the LEI can have relevance in the digital world by leveraging the strength of the LEI to provide unique and permanent global identification of legal entities. We've carried out one part of our effort and to combine the strengths of the LEI and digital certificates, but today we're going to focus on a second effort that leverages the use of the LEI and verifiable credentials. Of course, the verifiable credentials that were introduced by Andy, in which Andy, Drummond, Evernym, and Sovereign are very, very active in their development. We can go on to the next slide. So GLEIF began our involvement in the self-sovereign identity world by conducting several proofs of concept and with Evernym as a partner in the first. So we have conducted POCs in order to produce verifiable credentials, prove an organization's identity based on the LEI cryptographically and recorded on a distributed ledger blockchain. As was said in the introduction, Our POCs allow verification of identity, both of the legal entities themselves and for persons acting officially on their behalf. And GLEIF was blockchain agnostic. We conducted POCs both on the Ethereum and on the Hyperledger blockchains. So in these POCs, we created verifiable credentials based on a triple concept: an organization, a person, and an organization role, in which an organization is represented in a standard and permanent way by its LEI. If we can move to the next slide. A person by its name, in effect, its legal name that it can prove, and an organization role by an official role. So the organization is represented by the LEI, which is also already a standard. The person would give their legal name, which they could legally prove. And we're working on a further standard with ISO in order to be able to make organization official roles an ISO standard as well. So we use these credentials to create organization wallets, allowing legal entities and persons acting on their behalf to have verifiable credentials for proving identity in any business transaction. And on the next slide, we created a chain of trust that stems from GLEIF receiving its digital credential, its verifiable credential from the Sovereign Foundation, to the LEI issuer, conferring a digital identity on our partners in the global LEI system that actually issue LEIs, that can issue a legal entity, a digital LEI in effect, to a legal entity, and in turn that legal entity can assign verifiable credentials to one or more of its employees. And for the purposes of our POC, we restricted those verifiable credentials to those roles that could be proven in the public domain, such as in a business registry. So now I'd like to be able to turn over to Christoph, who's going to take us through both the issuance and the verification of verifiable credentials in our POCs.
Thank you, Karla. All right, let's see how verifiable credentials can be issued to persons acting in organization roles and how they can be used. So we have 4 actors in this. The Global LEI Foundation at the top of the chain of trust, providing governance and managing LEI issuers. The LEI issuer, there are currently 34 of these organizations managing in total some 1.6+ million LEIs with global coverage. We have the legal entity and its employees, and last but not least, the LEI data user. So in step 1, GLEIF receives its verifiable credential to digitally prove that it is GLEIF and is able to accredit LEI issuers. With this ability, GLEIF grants a digital accreditation to an LEI issuer by issuing verifiable credential which proves the LEI issuer is accredited by GLEIF and is able to issue digital LEIs. The next step is what happens already several hundred times each day. The LEI issuer validates the reference data of the legal entity and issues an LEI. And in addition, the legal entity can now request a verifiable credential or digital LEI with its LEI issuer. And the LEI issuer provides the legal entity with such a digital LEI to digitally prove the legal entity's identity and be able to issue verifiable credentials to its employees, which it does in the next step. And I would like to focus one moment on the simplicity of the system. The same protocol is used for all these steps of issuing verifiable credentials along the chain of trust from GLEIF to the LEI issuer, to the legal entity, to the person acting in an organization role, although the roles and use cases change along this way. And it leads to employees being able to leverage their verifiable credentials in the context of their uniquely identified organization, and that for each small business transaction. Imagine how powerful that can be. Now that the persons have received their role credentials, we want to make sure that users can find out about the existence of these credentials for specific roles. To achieve this, the legal entity can report back to its LEI issuer a list of issued verifiable credentials. and the LEI issuer can report this information back to GLEIF to make it available in the global LEI index. Protocols for such data collection are already in place in the global LEI system. The LEI data user can now look up person credentials either directly with the legal entity who might want to publish their existence, or if they have been reported back to the LEI issuer and to GLEIF, directly together with the LEI reference data at GLEIF's website. And this allows verifiable credentials to be leveraged in a variety of use cases. And Karla will present some of these use cases in a moment. But before that, I would like to demonstrate how a lookup of a role credentials could look at the GLEIF website. Next to the legal entity's reference data like name, address, business register number, and so on, the reported role credentials could be displayed and used to make requests for verification. Please note that the publicly available information does not include any personally identifiable information on the persons. An LEI data user can just see these verifiable credentials for specific roles exist. Only when a request for verification is made, the LEI data user can verify the name of the person alongside the organization role and verify that the chain of trust is intact, from the person to the organization to the LEI issuer up to GLEIF. That means that all of the verifiable credentials in the chain of trust are current and have not been revoked. And at this point, I also want to make clear that the credentials themselves are not stored on a blockchain, but they are just anchored on a blockchain. So the credentials are independent. So that also means that no personal information is stored on a blockchain. Just a quick look at the technical architecture. The POC is based on the sovereign network using Hyperledger Indy. That's a framework for providing digital identities rooted on blockchains. And for the management of verifiable credentials like creation, revocation, and of course the wallet, we worked with Evernym, who we proudly co-present with today, and leverage the Verifiable Organizations Network, short WON. And I think it is important to note that not much software development was necessary to create the fully functional proof of concept, because all the building blocks are really there. With this, I give it back to Karla to talk about the use cases.
Thank you, Christoph. So Christoph has just taken you through the proof of concept that that we delivered upon, and that's the first one that's listed on our list here: a regulatory filing by a reporting entity into a regulator. We also see promise for this in client onboarding and the Know Your Customer process in order to be able to prove the identity of one or more officers of a legal entity that is entitled to apply to a bank, for example, for business, and needing to show both the identity of the organization and the fact that they are entitled to represent it on the entity's behalf. We see tremendous opportunity for identification in import-export, supply chain, customs, border control, all leading to payment for goods and services, not only in the B2B space, but also in the space of also consumers being able to check on the existence of legal entities. We also see that we have the opportunity in order to present verifiable credentials, not only to execute business transactions, but also to be able to join foundations, networks, in order to be able to use that credential as a way to be able to prove and identify the prospective member or the prospective participant's identity. And in order to be able to extend what Christoph said about the fact that the personal identification information is not stored on the blockchain. We are aware that these solutions are also being designed in a way in order for a person or participant to be forgotten, according to something like GDPR in the EU. So thank you very much. This is the wrap up of what we've tested so far, and what we hope to extend and to be able to prove the value of the LEI in the digital world.
Fantastic. Thanks to both Karla and Christoph for that. Really interesting, and we've had quite a few questions coming in already on chat and Q&A, so we're grabbing those as we speak. Oh, thanks for that one as well. I keep seeing them popping up on my screen. This is what I love about the way Zoom works and these kind of webinars, because they can get really interactive. Let's just to kind of go up a few levels here. So Karla, just the role of GLEIF here then. You know, you showed that chart where, the slide where GLEIF is issuing credentials to these LEI issuers. Could you just tell us a bit more about the role of GLEIF itself in this ecosystem, and who these LEI issuers are that are dotted around the world? Because when I first started on this, it's a world of new terminology, isn't it? So can you just give us, like, from really high level, what does GLEIF do and who are these LEI issuers and where are they?
Okay, sure, Andy. So it's best to think of the global LEI system in layers. For example, I began by telling you that the global LEI system was a construct that the regulators wanted to be established. So the top layer, in effect, are the global regulators around the world that provide oversight to the foundation itself, the Global LEI Foundation. The foundation is a central operator in the global LEI system, maintaining the repository of LEIs and the reference data, and also any attendant services. We also are the main hub for which the LEI issuers, which is a federated system of over 30 organizations around the world that are actually accredited by the Global LEI Foundation to issue and maintain LEIs and LEI data. And so these organizations are not-for-profits, are business registries, are also commercial firms that have gone through a rigorous process at the Global LEI Foundation to prove that they can validate and issue LEIs, get that information to GLEIF at least once a day for posting and access in the Global LEI repositories.
Got it. So you hold the global LEI repository as well, everyone then refers to, right? Is that correct?
Correct.
And how many LEIs are there out there in the world at the moment? Do you have a rough idea?
About 1.6 million.
1.6 million. And I understand that LEIs are being mandated in some jurisdictions, so companies have to have them as well. Is that right? Some areas it doesn't seem like they are mandatory, but others they are. Is that right?
Yes. Based on the reason for founding the global LEI system, you'll mostly see the implementation from a mandating perspective from the LEI in the capital markets area as a response to the global financial crisis. This, of course, began with the regulators wanting legal entity identifiers to identify parties within OTC derivative transaction and other similar types of transactions. Especially in the EU, this has been expanded, and especially with the regulation and the legislation and implementations by ESMA, the European Securities Markets Authority, in order to report on other types of financial instruments in transactions, and also most recently with the application in their secured financings, SFTR regulation that's coming up on board.
Okay, so you see this kind of the use of LEIs, the mandatory use of them being expanded. You're seeing that happening, as we speak, essentially.
We actually have seen the emphasis on that over the beginning years of the global LEI system. But one of the reasons that we're here today is that we realized that the global LEI system was created as a public-private partnership between the public sector and the private sector, and that we want to be able to demonstrate and show the power of the LEI in being applicable and relevant and useful within private sector business transactions as much as it's been used if I'll call it historically, in the public sector for regulatory reporting.
Got it, right. And the LEI issuers then in different countries, you have several of them in each country, or do you have, and they seem to be a mixture of sort of public and private sector as well that are issuing LEIs, is that right?
Yes, we have actually quite a mixture. So some of the LEI issuers are located in their home country and only issue LEIs, or have a scope of wanting to issue LEIs only for entities within that jurisdiction. Then we have a number of large LEI issuers that are accredited to issue LEIs in more than 100 countries. So it's not where you're located, it's what experience you have and the accreditation that you've passed by jurisdiction in order to be able to validate and issue LEIs.
Got it, right, okay. Fantastic. So let's just come on to Christoph, just to talk through in a bit more detail how you see GLEIF's role in digital identity. You know, I guess in a way you're already translating corporate IDs to digits as an LEI, but this is a bit of a bigger, potentially more, or larger in its implications approach to actually issue verifiable credentials, which could contain a lot more information than the number itself.
Indeed, yeah. So, I mean, the foundation for digital interaction is trust. Yeah? You need to know and you need to be sure who you're dealing with. And the LEI is a unique and globally applicable identifier for business and can thus provide such trust. But how do you know that somebody who presents an LEI to you is really acting in the role he or she claims, or even the representative of this organization or business he's claiming to represent? And that's where the LEI and the digital world come together as a perfect match. The moment a representative of a business can prove to you that he or she acts in a specific role for the represented business, you can trust. And as Karla has mentioned earlier, GLEIF has looked into embedding LEIs and persons' roles into classical digital certificates and into using verifiable credentials for this purpose. And the verifiable credentials seems to be the more flexible approach, allowing better scaling of the solution because businesses can issue person credentials to the employees themselves based on this chain of trust that Karla showed us earlier.
Yeah, and I wanted to come on to that actually, because what you've done here is, I think it's superbly cool because you're bringing together organizational identity and human identity together. So you can say that here's an organization and Christoph works with this organization and here's proof that he does. And Christoph can also have other pieces of information about himself also as verifiable credentials. Same protocol for exchanging and verifying this stuff, whether it's a person or an organization or actually a thing like a car or a machine.
Exactly. That's the fun
so
part about it.
Yeah. So we've had just a blizzard of questions coming out. I'm going to come over to Drummond here, actually. There's a few questions on this one, Drummond. What are the differences between traditional certificate authorities, X5 and 9 certificates in this architecture, and verifiable credentials? And that's from, amongst others, Johannes Sedelmeier. I hope I've got that right. So X5 or 9 certs and verifiable credentials, Drummond, where you go.
It is an extremely good question, and one that's asked frequently about the emergence of, we've had digital certificates, Andy, for a couple of decades now, and we have an entire infrastructure around the world known as PKI, public key infrastructure, in which there's a role called certificate authorities, or CAs, to issue you those digital certificates. Now, the first and the most fundamental difference between an X.509 digital certificate and verifiable credential is that with a digital certificate, you as the registrant are actually relying on an external third party, that certificate authority, to verify your public key. And this is critical because if you want to engage in secure communications, whether it's encrypting messages or digitally signing messages or documents, the other party needs to know it's really your public key. So you need to provide proof of doing that, or else it's trivial to have secure communications and digital signatures that are impersonating someone else. So what that meant was, with traditional PKI, everyone who wants to use cryptography for security and digital signatures has to go through an external third party. And it adds time, it adds cost, it adds hassle, just to have a way to have our public keys to be trusted. So it also introduces, unfortunately, a single point of failure in the process. There are humans that have to pass that judgment and approve those digital certificates. And so unfortunately, humans are fallible, and there is a single place to attack, and there have been attacks on CAs. And when that happens, entire segments of internet infrastructure can be affected. So with verifiable credentials, we're taking it's based on a completely different approach to how that kind of infrastructure works. We're democratizing the process of how we can have verifiable public keys. We generate our own identifiers and key pairs, whether it's individuals or organizations, and then we use either blockchain technology or peer-to-peer cryptographic protocols to directly prove our control of those public keys. This makes it dramatically easier, cheaper, and faster to get the verifiable public keys we need, again, as individuals or as organizations, so we can have trusted relationships and communications. Now, it means that whenever we need to, for instance, add a new verifiable credential to our wallet, to our individual wallets as people, or to enterprise wallets as organizations, all the issuer of that credential needs to validate about us is some attribute of our identity. For an individual, might be our name or our address, or a government identifier, or, as we've just been hearing, for an organization, our LEI, and the information that goes with that. They don't need to be involved in the process of verifying our public keys. So as a result, issuing, maintaining, and asserting verifiable credentials is much simpler, faster, and more efficient than with digital certificates. And
so,
it means
you're kind of you're separating out the public key bit from the actual data which is in the credential, right? So,
exactly,
which itself is signed by the issuer. So
right, yeah. Precisely, and it just, everything gets simpler and faster, and this puts us in a position now to have as many public-private key pairs as we need to keep our relationships separate for higher security and privacy, and to be able to prove just what we need over those relationships using the verifiable credentials.
Cool, very good. So let me do one more technical one, Drummond, then we'll come back up a level into some of the more GLEIF specific stuff. We had a question from Natarajan Chandrasekhar, I hope. Who says, what's the relationship between an LEI and a DID? So a DID, a decentralized identifier. So briefly on this one, Drummond, because I know this, DIDs are like your favorite thing in all the world, even more than cat videos. So
okay, so first, an LEI, to be very clear, is a very unique identifier, and Karla herself was helped push through as an ISO standard after the 2008 financial collapse. Recognized, the Financial Action Task Force recognized that there needed to be a standard way across jurisdictions around the world to identify a legal entity of any kind, and therefore, an LEI as an identifier has two, really important properties. It's standardized, so that you know exactly what it is every time you see one, and there's a set of metadata that about the organization or the legal entity that goes with it. But secondly, it's got the property you have just one. That's a uniqueness property that is totally, that's, there are other government identifiers and programs, that enforce uniqueness, but that's a very special property. With DIDs, it's almost the other way around. A DID as an identifier is cryptographically verifiable, but because they're decentralized, we all generate our own and we can prove control of them. It's the opposite. You can have as many as you need. And the best security and privacy practice is to have one for every relationship when we're dealing as individuals, and when we're forming relationships with organizations. We call those secure, verifiable connections. Now, when you establish one of those connections with a DID, how do you prove that it's really you as an individual, or more importantly, you as an organization? What the LEI digital credential will do is on any of those relationships, if you're acting either as an organization in a business relationship or as an employee of an organization, as Karla and Christoph was explaining, all you need is that chain of LEI credentials to establish that you really are either the organization that's engaging in a transaction or an individual acting in a specific capacity in that organization. So it's with verifiable credential infrastructure now, coming out with this DID powered for the cryptographic relationships. Now LEIs become more valuable than ever. They are roots of trust for every organizational relationship and proof that's needed.
Yeah. So a DID, exchange of DIDs, it doesn't necessarily convey trust, all right? It's a way to cryptographically and securely connect. And then an LEI would be an attribute in a credential that you exchange across that connection.
Exactly.
Maybe a different way to think about it.
In the what we call the trust of RP stack that you brought up earlier, Andy, the first two layers establish cryptographic trust between the participants, which is excellent. You need that, but you still don't know who it is or what organization it is that you're dealing with on the other end of that connection. The top two layers are verifiable credential exchange, and then applications, digital trusted ecosystem work on top of that. That's where you need to establish either individual trust or, in the case of LEIs, trust that you are dealing with the entity that you expect to. And every time you do that, this is another really important feature. All of those communications, to the extent now that you need digital proof of having done that, they're all cryptographically loggable and auditable, so that they meet the regulatory requirements of jurisdictions around the world. And that's another place where LEI and GLEIF is, it's literally a program created by regulators around the world to meet their requirements. And so that's why they are part of legislation in different jurisdictions. And I think with digital LEIs and digital credentials for LEIs, they will be even more widely adopted because they'll become sort of the organizational standard for trust.
Cool. Thanks, Drummond. And actually, while you were speaking, Bob Celeste has asked, are there DIDs in the LEI verifiable credential? It's not quite, Bob. The LEI verifiable credential is issued by an organization, an LEI issuer. That organization has a DID, okay? And the other cryptographic metadata about that organization are on the ledger, sovereign in this case. So a verifier, when they receive an LEI within this verifiable credential exchange, they can go and they can verify the authenticity of that LEI, who issued it, it's not been tampered with, it was issued only to the people presenting it, and so on. Okay, thanks, Drummond. Let's just take a break on the technical side for a minute before people's brains explode. And let's come back to Karla and Christoph. So what you showed in the POC was this kind of recursive checking up the chain, right, to find this chain of trust. Now, we have loads of interest from banks for doing know your customer checks for people, right? Loads of interest. If only KYC could be done in like 10 seconds with presentation of a verifiable credential. But here in the corporate bank, when you're getting a corporate bank account set up, you've got to get the ultimate beneficial owner, and you've got to chase up the tree. This is the problem we had when we were trying to set up a bank account. Is Evernym Serbia is owned by Evernym Inc. in the US, and therefore you've got to follow all the way up the tree. And then Evernym Inc., the owners of that, do they need KYCing? So could you use the same recursive approach that you showed for the submission of financial reporting into regulators to be used for ultimate beneficial owner checking, and maybe using the LEIs to check all the way up as well? Maybe Karla, do you want to take that one?
Thanks, Andy. Yes, we think that we can, because when an entity comes to an LEI issuer in order to request registration for an LEI, the LEI issuer needs to be able to validate, one, that the organization itself exists, and two, that the person or persons who approach the global LEI issuer are entitled to be able to act on behalf of that organization. So it's the same kind of verification for wanting to go and establish a relationship, as you said, with a financial institution, you want to open a bank account, you, Andy, have to prove that you are authorized in order to make that request on behalf of Evernym, for example. And you can do that by showing certain documents that say that you're an officer and that you're a principal who could act on behalf of Evernym. It doesn't take away, I mean, getting back to the DID and to the LEI and establishing the chain of trust. These credentials, these verifiable credentials that are going to be issued on the LEI doesn't obfuscate the need to have to protect and control them, just like we protect and control our credentials that we carry around in our wallets, that make sure our identities are not stolen, and to make sure that those credentials don't fall out in order to be able to get misused. So there's a level of structure and governance and organization that these legal entities are going to need to put around their organization wallets to make sure that at all times that only valid ones are able to be used, and ones that are revoked return no's from proof requests.
Yeah, that's a really important point, actually. There's, as well as some fancy technology under the skin, there's business processes that have to be in place to make this work as well. And you were looking at that as part of your POC, I believe, as well, right? A question from John West, and there's so many questions. This is unbelievable. So thank you for sending them all in. We'll cover as many as we can. We'll probably go to 1/4 the hour, by the way. So John West says, what next after the POC? Maybe hit this one over to Christoph. And what's the roadmap? Bihao Song says, what's the roadmap for moving this to production? Could we find more detail? And someone called Andrew says, what's the next step given LEIs are already largely used in financial institutions? Okay, Christoph, what next?
in this order, yes, exactly. So we have done several POCs on this topic, and we are continuing to do so. So we're still learning a lot about this and trying to find out the best way how basically to marry the two words, as I mentioned earlier. I think it's not a secret to say that GLEIF has recently joined the Trust Over IP Foundation that you also mentioned recently, as another way to continue this topic and prepare ourselves there for the future. But I'd also reach out to Karla. She is like our product manager really for the verifiable credentials topic in GLEIF, if she wants to add to that.
Yes, thank you, Christoph. I'm glad you you brought up the Trust Over IP Foundation, because with the variety of members that have stepped forward in order to become part of this foundation, everybody brings with them expertise. And GLEIF's expertise is to be able to offer the LEI in a verifiable way, to be able to become part of that identity piece for organizations on any of the implementations that could come out of the agreement on the standard stack of Trust Over IP Foundation and further implementations. We want to be able to offer the LEI as a stable trust identifier of legal entities and organizations in these kinds of solutions.
And Karla, let me add, since I'm the interim executive director at the Trust Over IP Foundation, that there is tremendous interest in that. I'm very pleased that GLEIF became one of the founding members, because we launched just 2 weeks ago with 29 founding members, and we are already over 60. The interest has been very strong, fueled by the potential for verifiable credentials. And the question, because these organizations are all coming in and saying, well, we have to start, with trust within our organizations, and there's a lot of interest in the LEI digital credential as an organizational root of trust. So I think it'll be a very rich environment to quickly determine what are the best practices in this new world of verifiable credentials and decentralized identity.
Thank you. Yeah, excellent. It's just the beginnings of this amazing transformation that I think is going to happen, and trust over IP approach gives you a framework to say where you're going to play. You're going to do this bit in this part of the stack, this bit in that part, and so on. So well worth having a look at that if you haven't already. Here's another question from Mariella Reason. Hi, Mariella. How relevant is this pairing now? Well, the pairing of LEIs and DIDs and verifiable credentials, I think Mariella refers to, considering COVID-19 and the resulting rise in financial crime. So we kind of touched on this a little bit, I did in my introduction, about trust at a distance. You know, I can't go to Belgrade to set up the bank account. If only there was a way to do it securely and remotely, how business processes would change. So Christoph, do you want to give us just your view on that, and then we'll go over to Karla. So,
certainly, Andy.
you know, the implications of COVID-19 and how this approach you're describing could help.
Yeah, I think with the recent developments in the COVID-19 area, it becomes super relevant. I mean, we have started this before COVID-19 came up to improve digital commerce and to ease basically the, like say, trust at a distance and all of these topics. And now with all these limitations on physical meeting and basically being dependent on doing so many things remote and, you know, like ordering foods online and stuff like this, just as a practical personal example, I think that just stresses the point even more, how relevant it is. But yeah, it's one more very good argument for it, I would say.
Yeah, Evernym, we've seen more interest than ever in digital credentials since this COVID thing kicked off. You know, people suddenly they realize they can work at home. How do they prove who they are? How do companies interact remotely? I don't know, Karla, do you have any comment on this, the COVID-19 implications at all?
Just that I think that we had a nice demonstration during the kickoff event, the launch event for the Trust Over IP network, that that credentials could play a large part in authorizing people access into buildings in order to be able to respect social distancing
Right.
and to keep people safe.
Cool, Drummond, anything from yourself?
Yeah, I'd like to bring up that there's of course been tremendous interest specifically in the use of digital credentials for for fighting COVID and helping to reopen the economy. There's been a fair amount of controversy about, if you're starting to issue credentials about, for instance, testing, well, the medical sciences we hear debated on the news every day. We don't exactly know what the science is yet, and is that going to raise problems around digital inclusion and tracking and tracing. And I want to reinforce all of those are very valid concerns, but what Evernym is focused on with our customers is there are clear and obvious uses, some of which for digital credentials were already in flight, such as proving the identity of a healthcare worker to increase their portability across, they need to move between hospitals and locations now very quickly. And if they can do that and prove their identity with using a digital credential in a new location, it can save hours of time and put them, on the front line much faster to help. Then there's also the question of, as we're preparing, at some point we're going to have a vaccine. Having a credential that you've been vaccinated from the authority that issued that vaccination is going to be very useful and far harder to spoof and much more lower friction to be able to assert, once we get to that point. So also proving that you're an essential worker, as we're reopening the economy. These are uses for digital credentials which are not controversial and will really help us with this transformation we have to go through as a society.
Cool, thanks, Drummond. So I'm sort of pulling that all back in then to Mariella's question about financial crime. I think the POC that was done by the GLEIF team was allowing essentially somebody to know that the person who's trying to interact with them is a real person with an identity that's been verified, but is also entitled to act for a company, and that company is a real company, and that company has been attested to by a legal entity identifier issuer. So if you're able to assert those things using a standardized interactive protocol and verify that data in seconds, then you've got to think that there's a really good opportunity to reduce financial crime with imposters and man-in-the-middle attacks and so on, because the way the protocols work, the use of these decentralized identifiers mean that there can't really be a man in the middle, can there? So, so I think that could be a really interesting use of digital credentials as well. Okay, let's come on to another of the massive number of questions. We're not going to get through all of these at all, but let's try this next one here. So this one, there are new marketplaces. So are there new marketplaces or innovations that become possible with the merging of verifiable credentials and LEIs? What changes at GLEIF in the next 5 years? So new marketplaces or innovations that become possible here. This is from Taylor. Karla, do you want to cover that? You're looking at the future of GLEIF covered in credentials and enabling new global marketplaces, do you think?
Yes, we do. And I think that goes back to some of the use cases that we highlighted at the end of the presentation. While we see that the regulatory space in the capital markets is adequately covered at this particular point, we see more of a growth, or the future of the growth of the global LEI system, as I said before, as valuable for business and commerce, opening up trade, opening up supplier management, opening up to be able to prove a credential in order to be able to participate in a certain kind of activity, especially supply chain, provider, trade finance. It's actually, in that particular case, a very natural extension of the LEI, because to expand into the physical goods side of the world, they at least need to be paid for. So they're always connected in some way to the financial world. And so we see that as a natural extension, if I could call it that.
Yeah, got it. We got another question here, amazingly. There's about another 30. Another question from Simone Brigina. You said SSI architecture is blockchain agnostic, but in the architecture design, we saw only Hyperledger Indy. As far as I know, Evernym architecture is based only on Hyperledger Indy implementations, I should say, at the moment. Could you please specify more details about the blockchain agnostic way of working? Well, in fact, there was, Ethereum was on one of the, it was Sovereign and Ethereum you worked on, wasn't it? Christoph, do you want to just cover sort of the approach that you have for interoperability, I think is the best way to put it.
Yeah, certainly. So we said GLEIF is technology agnostic towards the implementation of this, because we're kind of looking at like the business case and what can we achieve for people with that. So we have done various POCs, as mentioned before, also one of them that was with you on Hyperledger Indy, obviously, others on the Ethereum network, and also looked in other technologies to be like really independent and get the best of it. Regarding the interoperability, I'm not the VC technical expert, but just the fact that the verifiable credential is not on the blockchain helps me a lot to understand that interoperability is possible. And I don't know if Drummond wants to also comment on that from a more technical perspective.
Absolutely. The short answer is that the whole abstraction layer of layer 1 of the trust over P stack is the DID specification. So any blockchain or distributed ledger that can resolve a DID and return the associated DID document with that cryptographic metadata that Andy was talking about will support the layer 2 of the interoperable digital wallets and agents needed, whether by individuals or organizations, and layer 3 of the exchange of verifiable credentials. So there are other, so we've been talking about, and what Karla and Christoph described was a POC they did with Evernym and the sovereign network as the underlying layer one, in that case, a public permission blockchain. However, you're working that against Ethereum with the other POC you did. There are, I think, 7 different DID methods for Ethereum. There's the Vaughn network, which is an overlay network based on the side tree architecture that Microsoft and others have been using, that can anchor to either Ethereum or Bitcoin or any other network you design side tree for. All of them should work. And again, uniform architectural abstraction, which is they just need to support DIDs in order to support the higher layers.
Yeah, and there are, that's great, thanks, Drummond. There are other projects that are going on in other parts of the world, so Karla mentioned Vaughn, or maybe Christoph mentioned Vaughn, the Verifiable Organization Network, with that's British Columbia and Ontario, governments of those in Canada, issuing credentials about companies, not LEIs specifically, but the fact you're a licensed restaurant, for example. So that's they've issued millions of credentials now there. There's some really interesting work going on, headed up initially by Novartis, around supply chain management, third-party risk management. And now there's been a group formed called Pharma Ledger, which is looking at this whole supply chain side of things. How do you know your supplier and your supplier's supplier and their supplier are certified in the right ways? So this is a really rapidly expanding area. And having the kind of the golden credential of the LEI, which Bill Nichols actually had a question. He described it as the center of gravity for the train of trust. Nice there, Bill, thank you. It gives you a sort of like a birth certificate for a company almost, doesn't it? And you can then anchor other credentials onto it by proving you have the LEI. Can you then get another credential for something else? Actually, Bill Nichols said, if the LEI is the center of gravity for the train of trust, are we keeping track of the places and means by which timing differences in the information update process or the latency in the system can be exploited? Wow, okay, so latency in the system. That's an interesting one actually for verifiable credentials, isn't it? Because if an organization has a credential about itself from an LEI issuer, then it's up to the LEI issuer to, if something changes, to send a new version of that credential to that company. Did you take that into consideration during your POCs, or is that in a kind of to come in the future? Maybe Christoph, I'll throw that one your way.
Yeah, I'll give my view on that. So I think that that is a perfect question. Thank you for it, because one of the great things is that we really kept it lean. So the content of the verifiable credentials we created in the POCs didn't contain much information. So the legal entity credential contained basically their LEI code, not the reference data. And as I stated earlier, with the classical digital certificate, where all reference data was basically hammered into, and then you have to revoke the certificate and issue a new one if you want to update the information. By just putting the LEI as a database key, a reference to the actual reference data, which is stored then in the global LEI index, in there you're very flexible to actually get all the updates that our LEI issuers do put into the data, basically real time. So multiple times a day it's updated into your application, because you don't store it in the credential itself, but make a reference to the global LEI index, which is frequently updated.
Right, okay. So you're using it to prove possession of the thing that then allows you to demonstrate something else. Interesting, okay. Steve Panath has been prolific on his question asking, so thank you very much, Steve. I'll just pick one of them. Is there recognition of LEIs by FATF or AML regulators? Karla.
We're certainly hoping, and we have some of our colleagues working with FATF in order to be able to demonstrate the value of the LEI in this. And This also has a bit of a relationship to one of the POCs that we are conducting now, where payment transactions are involved, and regulators are involved in order to be able, within that ecosystem, to view transactions for which they can have supervision or oversight for things like sanction screening, AML, etc.
So you're going to be able to use credentials to prove you're allowed to have oversight as well, then, for example.
Yes, we are both looking at the membership aspect of it to be able to become part of an ecosystem, and we're also looking to expand the kind of recognition from the regulatory community of how this could be exploited and leveraged in particular areas. Extending from what we did with the regulatory filing, now taking a look at more individual payment transactions, for example, as having credentials that could be associated with organizations that are allowed to execute them.
Got it. Interesting. So you can match the payment to the person and confirm that they work for the company and they're allowed to be a signatory, for example, and the payee is valid and in the same way. So you can, going back to the question from Mariella earlier on, if you're able to provide assured payment instructions that you can check all the parties are who they say they are, that's got to help on the financial crime side of things as well, right?
So more to come on that.
Yeah.
We actually hope that extending from what Christoph said, that we have the individual wallets, which is where SSI started. We introduced the concept of organization wallets with our POCs, the first one being with you, Evernym. We also would like to see this come full circle. Christoph described that for the most part, that the credentials, the schema were very, very simple, and in most cases just contained the LEI. And so the referential data didn't have a bearing on the validity of the verifiable credential. And you just referenced the most up-to-date information that was on the global LEI system. But legal entities themselves have quite a bit of latitude here on being able to make the verifiable credentials relevant for use, not only in a business context, but think of a real life situation. I want to apply for a loan, and what happens now? Somebody has to ring up my employer to find out that I work there, and somebody may need to ring up my employer to find out that I make enough money in order to pay the loan back. So these credentials that are largely based on a person doing business on behalf of and representing their company can also contain some employment-related data that could help them in their personal lives as well. So it's almost as if we've come full circle, starting with individual wallets, adding the organization, and then allowing a use case to actually utilize both.
Yeah, because at the end of the day, people act on behalf of organizations, right? So I think what you've done is by showing that the way that human identity and organizational identity can be combined, you can get that sort of combination of trust that enables the commerce to occur in a much more friction-free manner. Awesome. So I'm going to just ask a question that I'm going to answer here. Actually, it's from William Stroud. How do you plan to manage revocation across geographically distributed networks without specific routing that gets ahead of suspicious transactions? All right, so this is a really interesting one. Again, back to the financial crime side of things. You can't tip off, right? So if you think someone's money laundering, for example, there's an associated crime about tipping off, letting the person know that they're under investigation, for example. So we could go into a lot of detail about how revocation works here, but what essentially you can do with verifiable credentials is prove something in a positive way. So they don't really do blacklisting as such, or hot file kind of listing, that kind of thing, because with verifiable credentials, the holder of the credentials is in charge of their presentation. So just like I couldn't force you to tell me you're on the terror watch list when you fly, nor probably would you tell me if you were. You can't force somebody to divulge some credentials. So they're not replacing hot list, blacklist, that kind of thing. But revocation works in a very, very clever manner. That means that a verifier is able to check the revocation status of any data they receive from a credential holder, be it a person or an organization. The verifier can check whether the data they've been receiving has been revoked by the issuer without having to speak to the issuer, which sounds a bit like kind of some weird voodoo magic. But because of the way the encryption protocols work, the verifier who, and it could be a regulator or a bank, whatever, who asks Drummond, please prove your Drummond, give me a passport or a driving license or something. The verifier can check the authenticity of that and the fact it's not revoked without ever having to speak to the driving license authority. And that gives you huge global scale potential because you don't have to knit everyone together with technical integrations. And that's one of the reasons why we have a lot of the problems we do with scaling this sort of stuff, or we have had until now. So we've got another 5 minutes. We'll just go 5 more minutes. Let's just check. Okay, so yeah, we have some people dropping off, understandably, because we're going over the hour. We've still got about another 780,000 questions to cover. So let's cover this one here. Gina Morgan, hi Gina, asks, are LEIs limited to financial sectors in their implementation today? Karla, one for you.
No, they're not. Going back to the scope of the ISO standard, the scope of who could get an LEI is not limited just to financial firms, although we saw the first implementations in regulatory reporting after the financial crisis very much concentrate on these types. So any type of legal entity that can be proven, trusts, partnerships, Inc., manufacturing firms, service organizations, funds, for example, small sole proprietor establishments that are registered in a particular business registry, although the initial focus with those kinds of firms by the regulators, we're trying to be able to track sole traders. But the scope is much broader and much wider than just financial firms.
Got it. Thank you for that answer. And this one it's actually 3 questions, all same sort of type. So Stephen Bauer asks, what kind of cost is involved in getting an LEI and a verifiable credential from an LEI issuer? William Stroud, in the same vein, says, being a central authority has enormous cost. How's it funding? How's it funded? Johan Rode says, thanks for taking the questions. Why is the cost so high for entities to create LEIs? Okay, Karla, probably one for you on the money side of things.
So the system was created by the regulators on a cost recovery federated basis. And so all of the LEI issuers have their own operations, and they set the cost recovery price in order to be able right now to issue the LEIs, do the validation, issue the LEIs, collect and report the entity level data and certain relationship data depending on the type of entity that it is. So those prices are set individually on a cost recovery basis by each individual LEI issuer. GLEIF is funded by a piece of that collection of registration cost in order to be able to establish and maintain the global LEI repository. Things like search, APIs, the golden copy, etc., as well as perform the accreditation process for the LEI issuers and research projects, for example, to be able to increase the adoption of the LEI like we're speaking of today.
Thank you very much. Got it. Okay, let's just do one more. Vic Cooper, hi Vic. Does an LEI become something of a verifiable 1-800 number for a business? Excellent. Karla, do you want to cover that one as well?
Yes, we have heard before early on, especially when we only had reference data that covered the entity itself, that it was kind of like the business card information about an entity. But the business card information needed to be validated and needed to be checked. And then this very valuable credential that could be used in a permanent and persistent way, you know, hangs on that identifier. But we haven't heard the 1-800 before. We've heard the business card comparison before.
Excellent, thanks, Karla. So I think today then we'll wrap it up there. We've had a really good intro to legal entity identifiers, which is a fascinating area and a rapidly growing area. We've seen how LEIs can be combined with human identity to create a chain of trust, and how that's been demonstrated by the GLEIF team. And also some of the potential, you know, an LEI is not just for financial institutions, it's for everybody. It can be combined with other data elements. There's activity around the world on verifiable credentials for organizations. And the undercurrent that is driving all this is a need for digital trust that hasn't been able to be delivered with any other technology. So here we have open protocols, interchangeable, anyone can issue a credential about anything, and then you've got the trust over IP framework that allows you to figure out how do you establish human trust that goes alongside the cryptographic assurance. So I'd like to say thank you very much to Karla and Christoph from GLEIF, and also to Drummond for joining us on this one as well. Hugely informative stuff. Thank you very much, folks. Keep an eye on the evernym.com website for the next webinar. This one, we have recorded it, so it will go up on there in a couple of days normally. And keep an eye on the schedule for the next one coming up shortly. With that, everybody, thank you so much for coming, and thanks for all the awesome questions. Cheerio.
Thank you very much, Andy.
Thank you, Andy.